Welcome, everyone. I'm so happy to have you all here for this panel that we have today with our alumni from our Impact Investing in Africa courses. What I'm going to do actually just to ask to start out for everyone to introduce themselves in the chat, which people are already starting to do. Got some wonderful, wonderful alumni representation. This is excellent. We can just all have a chat about all of these things. So we'll go ahead and get started. We've got 5 excellent panelists that have been put together by myself, my colleague Steve, who will be running the panel. Just going to do a quick introduction. So my name is Ani Patton-Power. 6 years ago, created the Impact Investing in Africa course with money from the Flanders government to do the original creation of the course. This involved actually creating most of the curriculum, as this was the first Impact Investing executive course on the continent. It was a lot of work to get going, and this will be the 6th year that it has run. We have taken the opportunity to be able to build on everything that we've done in the past 5 years and our 200 alumni and all of the content that we have built to be able to bring it online. And we're very excited about this because we know that the need for this expertise and this information is only growing. One of the things that we're excited about the blended format is that it doesn't limit us by geography anymore. So we've compiled guest speakers and lecturers from about 15 different countries. There's about 40 of them in total that will be speaking on the course. And this is by far the broadest number of speakers and talent that we've been able to access purely because of the format. It also doesn't limit us from a time perspective. One of the things that we've heard again and again is that a week is not enough time to be able to really process all of this information. So we've taken the course this year, put it out over 4 weeks. It meets 3 times a week over those 4 weeks for 3 hours a day, Monday, Wednesday, Friday, and a lot more time to be able to process and be able to go through the material and be able to integrate it into your own work. We've also been able to keep all of the things that we think make the class work, being able to engage with your fellow colleagues, as well as the practitioners that we've brought on board. And we've taken the talking to you piece out and pre-recorded all of the lectures so that the time that you spend in those class sessions will be 100% discussion, Q&A, and case study interrogation, often in breakout rooms and small groups with these practitioners and facilitators to allow you to be able to really dig in to the material. And we'll be sending some more follow-up information. So to talk a little bit about how they have taken this impact investing classroom material and turned it into real world work, we've invited 5 of our alumni today to come and discuss their own work. Hamdiya is currently the general manager of the Venture Capital Trust Fund, and Hamdiya is both an alumni as well as now a lecturer on the course, which is excellent, bringing her experience and expertise from West Africa. We're very happy to have her as a part of this. Todd and Vukile join us from Sanlam Investments. Todd is the head of distribution alternatives at Sanlam, and Vukile is a junior portfolio manager at the Resilience Fund, and both of them are going to be speaking about the work that they've been doing. And we at the Bertha Center have been working with Sanlam to be able to develop some of this impact investing strategy and have been very impressed with how far they've been able to bring it. Melanie is joining us from Investec, where she's part of the global corporate responsibility team. There's been some great movement at Investec as well around bringing out some new impact investing products, which we're going to hear about. Saphira joins us from the DBSA, from the Operations Evaluations Unit, and is going to talk a little bit about some of her learnings around impact measurement, which is a huge component of impact investing. Thank you to all of you for joining us and for giving us your time and your insights and your knowledge. We really appreciate that. I'm going to turn over to my colleague Steve, who is also helping with the impact investing course for the Master of Ceremonies. Steve, do you want to take over?
Great. Thank you so much, Oni. Yeah, we're very excited for this year and how it's going online. I joined the Bertha Center earlier this year, and it's already been such an amazing experience, and I've learned a lot from attending the course last year and just being part of everything this year. We'd like to start with Sanlam Investments. So Todd and Vukile, would you take us away? Thank you.
Well, thank you very much. And thank you to the Bertha Center for the invitation. We're obviously delighted to participate and very happy to be advocates for your program. I think maybe just to start off with, I'd just like to give you a little bit of background in terms of sort of how I ended up not only at the Bertha Centre, but also have a real focus on impact investing. But just wanted to give some background in that I spent about a decade in the UK, previously being in South Africa. And then when I was looking to come back to South Africa, I really specifically tried to find a job at an NGO. That was my pure focus. I looked at all sorts of opportunities, and in the end, I totally bottled it and ended up in a corporate at Sanlam. And not only that, but I switched over from a consulting role to the dark side of asset management. So I couldn't have got it more wrong, I think, than if I'd tried. I think there's the change in how I'd viewed that move really happened when I have attended the course in 2018. That came at a time when the world was really moving quite quickly in terms of a growing social conscience. My eyes were really opened, I think, to the fact that there's a global community of like-minded investors and individuals and institutions out there, such as the Bertha Centre, such as GIN, many industry bodies, lots of lead impact investors out there that are really trying to galvanize and empower change. That's the main kind of driver, I think, for what I'm doing at present. And that kind of was catalyzed by the time I spent on the course 2018. So I think really understanding from that moment on that impact investing was mainstream. I think now, almost $750 billion in assets are directed to impact investing. And I think everyone's also conscious that there's focus to achieve certain targets from the Sustainable Development Goal perspective in what's now only 10 years. So even the work that has been done to date isn't enough. There really needs to be this collaborative effort. I think not only the networks that originated on the course, but also our engagement with the Bertha Centre and other like-minded investors and stakeholders from that moment on has really, really made me realize that that decision of where I landed when I came back in Sanlam was actually a blessing in disguise, because I really think the likes of a business which has a big balance sheet, which has a large footprint in terms of having presence in 34 countries across the continent, and really being a business now that wants to be a purposeful organization as a corporate, but specifically as an asset manager where I find myself. So that kind of was all catalyzed by my learnings on the course. And I think the second takeaway was really around how advanced and mature I came to understand in that week the industry has become. So whether you're talking about innovation or methodologies or collaboration or measurement or common understanding and language, and the breadth of influence, there's just so much that the industry has evolved. And there's a lot of great content on the course, particularly in terms of innovation, which are focused on addressing societal and environmental issues. So I don't want to spoil the course, but what resonated most with me was the concept of blended finance, particularly from the angle where if we're going to be successful and we're going to get the scale that we need, we can actually identify investors who've got the same goal, but they might have different mandates. And you can actually bring them together to play a role in a collaborative effort to innovate and to find solutions. So there's a lot of great content, as I say, around innovation in particular. And that's something that we're bringing into our business at the moment. I think finally, my third takeaway is I think it's one thing about being intentional about what you want to achieve, but it's just as important to demonstrate success to investors, not only on the financial outcomes, but your ability to measure and manage the impact that you're making. Move to the next slide. I'll quickly just give 30 seconds on how we're applying that in our business. We do have a number of initiatives on the impact side, but the one I'd like to highlight is a response that we have had as a business to the crisis that we're finding ourselves as a country, particularly in the fact that a lot of people are suffering due to jobs either already being lost or at risk of loss. So we put together a range of funds which specifically focus on job creation and job preservation. But I think a lot of what the course brought to our understanding and also the work with the Bertha Centre subsequent to that is the depth to which you actually apply that. So we don't really just want to be counting jobs. We want to be understanding the inclusivity of the job growth, the quality of the jobs. We definitely want to align ourselves with what the greater goals are, particularly around the National Development Plan, around the Sustainable Development Goals, and specifically around finding like-minded investors who've got the same aims. So you will be able to see on the slide, we effectively have a range of impact strategies which have that common goal of creating and preserving jobs, quite a meaningful permanent job target, And also we feel that as a entity where the role that we play between Sanlam, between investee companies and between investors, that we can actually play the role where we can drive capital that otherwise would not be allocated to these areas through our relationships with the institutional investor community. So that's all I wanted to cover. I'm going to just hand over to Vukile. So Vukile is really, she's at the coalface driving the SME debt strategy. So I'm just going to ask Vukile to speak to that a little bit.
Thanks, Todd. Hi, everyone. I'm so excited to be on this platform, especially as an alumni. I joined Sanlam 5 years ago, and I was immediately involved in our Resilient Investment Fund. And effectively, that is an off-market or private debt fund where we provide loans to businesses, specifically with the intent of providing very basic needs to the most underserved of our society, and those needs being affordable housing and education, green energy, and really access to financing, particularly for SMEs. So it was incredibly inspiring to be on the course and to be amongst like-minded individuals. This fund has been on the go for about 7 years, but up until that point in time, we felt as if internally and from a Sanlam perspective, that the impact really hadn't gained momentum. And so to be within a room with like-minded individuals who believed in a common cause really did inspire us quite a bit. And since then, from a corporate perspective, we have seen a shift, as Todd has mentioned, and particularly through our Sanlam Legacy Fund and the commitment that Sanlam has made to providing support to businesses ranging right from small and medium-sized businesses to larger corporates as well. I think that is another key takeaway that I could express from the course, really the call to action and really being intentional about how you respond to a particular problem. So what we've seen as Sanlam really is that there are small businesses that are going through a difficult time because of COVID-19 and that really are at risk of retrenching their employees. And so that is the space that we're going to be playing in, particularly with the Legacy SME Fund, of providing that financial intervention to make sure that we preserve those jobs and we also ultimately create jobs and leverage off of the opportunities that may come through this environment. I think also another key takeaway that I can really kind of relate to this SME Legacy Fund that we've now launched is also the importance of testing our assumptions around impact investing. I think as impact investors, we have quite clear intentions, but if you don't measure your impact or if you don't go through a process of understanding the theory of change and how your funding actually ends up or your investment ultimately results in actual impact, it can be very difficult to know whether or not you've actually generated the social and environmental impact that you had initially wanted to create. So that aspect of the course was incredibly useful, the impact measurement piece, and I'm really happy to hear that the course is over a longer period of time, because I personally felt as an alumni that I'd wish that we had had more time to really interrogate all of these issues and kind of absorb them. So I'm really happy to hear that as well. So thank you.
Thanks so much, Todd and Vukile. Thank you also to everyone who's posting questions. We see them coming through. We will get to as many of them as possible. Our next speaker is Hamdiya. Over to you.
Hello, good afternoon from Accra. My name is Hamdiya and I work for Venture Capital Trust Fund. What we do at the Trust Fund is to support fund managers, especially first-time fund managers, to raise funding to be able to support SMEs, mostly generic funds investing across sectors. I've been involved in the space since 2008. I've been doing this work, and then around 2013, we got to do some work with the Rockefeller Foundation on impact investing, what needs to be done. So we did some studies on barriers to impact in Ghana. Then I heard about a course and I wanted to learn more. And I joined the class and I realized that for the first time, I'm in the midst of like-minded people who really want to get this at scale to really be more impactful than they were doing at the time. It was a very good eye-opener. There were a lot of things that had never crossed my mind or crossed any of the things I have read on impact investing. And so it was very, very interesting for me to see, although we were members of the GIN at that time, the way Oni put the whole global landscape together was very fascinating. So the key takeaways for me from the program was the fact that although we were trying to push impact investing in Ghana, we were looking at it more as an asset class, but then it was very clear to me that it was more an investment approach. So you need to be more intentional across board so that you can really deliver the impact. So that was one of the first key takeaways for me. And then I realized that although we were saying we were impact investors, we really haven't sat down to look at our impact thesis to be sure of exactly the kinds of impact we want to deliver, and also trying to align our strategy to impact. For me, it sort of felt that we were doing some sort of ad hoc impact investing programming, but we needed to bring more intentionality, more strategy, more of making sure that it cuts across everything that we are doing so that we can really deliver at scale that we are looking at. So coming back, what I did immediately was to ensure that we align our work. So we got our strategy, our impact strategy done, impact thesis done, and then we try to align everything we are doing to the SDGs, because we felt that sitting at where we are, the best measurement will be to look at how to align our impact strategy to the SDGs when it comes to our reporting, so that we can mark what we are doing. So we aligned our strategy to SDGs. We began looking at being intentional. So what we first did was to look at our portfolio, look at what was missing, and begin to be intentional about correcting some of these things that we haven't really been intentional about, and then look at all the cross-cutting issues within the SDGs and begin to measure them. This year, we are going to launch our first SDG link report, and I'm really looking forward to it. The program is really an interesting one that, if you're really considering to be more impactful in what you are doing, there are so many things that you could learn. And one thing that also comes so handy for me is the network that you build as part of the course. I'm still in touch with some of my colleagues on the program. We still have discussions on some of the things that we want to do. I guess I will just have to leave it here. And then currently, we are working on a startup catalytic fund. Venture Capital Trust Fund is actually a fund of funds. We invest in fund managers, and we are setting up a startup catalytic fund. What that is to support very early stage innovative businesses. This is one thing that came out, that the support for the very early stage businesses is very much lacking in the ecosystem. And so we are trying to set this up. We are looking for it to be launched in August so we can support very, very early stage businesses to link them up to fund it. Thank you.
Thanks so much, Hamdiya. It was great to learn from you in last year's course, and Hamdiya will be joining us for this year's course as well, so don't miss out on her sessions. Next, we have Melanie Janse van Vuuren from Investec. Thank you, Melanie. Over to you.
Okay. Thank you to the Bertha Centre for the opportunity, and Arnie and her team for me to present today. I'm dialing in from Johannesburg, South Africa, just to tell you what's been happening at Investec over the past couple of months. And yes, I can say it's been quite a journey and definitely did not lack any excitement. I've been asked to identify 3 key learnings or takeaways from the Impact Investing course. And I'll start at the foundation level, where it was confirmed, it was just a confirmation for me that impact investing, and it's not just a trend, it's definitely a necessity. And I don't know if you've heard about the great wealth transfer, but it's been speculated that over the next 25 years or so, almost an amount of $30 trillion will be transferred from households to children. And these children are millennials, and they are motivated by impact. So it's necessary for us to make sure we have a social license to operate. And this can only be done if we show without question that we are making a positive contribution to society. On an individual level, for me personally, I realized that it's never too late to start. On the third day of the training course, I was extremely overwhelmed. It was a lot to take in a short space of time. It was a lot of work. It's all this new terminology of blended finance and this and that. So I was sitting in my room on the third, and I didn't go out and socialize that night because I was just overwhelmed by the magnitude of the change that was already happening. And this was after hearing so many presenters, what they've done and what they've achieved successfully in their own capacity. So many people were doing so much stuff, and I was sitting there in my room all alone, feeling somewhat inadequate. I really struggled to understand what difference I can make in the world, and a world that needs so much. During the next couple of days of the course, I realized that even if I do make only small changes, it can make a big difference. And just by questioning your own investments or what's in your own pension fund, it's already a start in the right direction. From a business perspective, we all know that the finance sector has a significant contribution to make. There's no doubt about it. We just need to reimagine capitalism and think more about profits for purpose rather. And that can lead to extraordinary opportunities that can drive growth and innovation. And this leads me to a quote that I found last week, and I thought it would be fitting for this webinar. It's a quote by Joel Solomon from the Clean Energy Revolution, and he says, "We need to start to talk about money in ways that dethrone it and make it subject to human ethics and standards of love and decency." Yeah, so from these learnings, what has Investec been up to over the past couple of months? So I mentioned before we got to our fair share of activity and excitement, and these are all examples of just a few of these opportunities that's been coming our way, and we are seeing almost every day new opportunities. So from a corporate side, we were the arranger and the sustainability coordinator for a 600 million euro facility, a sustainability-linked loan. And this has been structured with interest payments linked to ESG KPIs in areas such as environment, gender diversity, and governance. If these 5 KPIs are met, the interest payments then will reduce by up to 10%. And if 3 of these KPIs are met, it will reduce by up to 5%. But the beauty of this is that there's a positive feedback loop. So the savings from the interest payments are ring-fenced for investments in carbon reduction initiatives. So that's quite cool. We've also created a clean energy fund, Revigo, which we expect to list on the stock exchange later this year. It's a 1.25 billion bridging facility, and this will allow Revigo to continue funding its investment activities and to acquire renewable energy assets in Africa ahead of its planned listing on the stock exchange. Then we acted as a financial advisor to KKR Global Investments on its investments in green collar. KKR provides commercial solutions to climate change challenges that the governments, the corporates, and individuals are facing. And Green Collar, on the other side, provide a leading environmental markets platform in Australia. They are also a project developer in Australia in the carbon markets. So what Green Collar does is that they develop green carbon projects. And when these projects are operational, they then facilitate the sale of the credits to private and public organizations to help them then manage their own carbon footprints. So we haven't done this yet, but we're looking at issuing an SDG bond, which would be linked to our 6 priority SDGs, which we've chosen as quality education, clean water and sanitation, affordable and clean energy, decent work and economic growth, sustainable cities and communities, and industry innovation and infrastructure. We also see a lot of opportunities within our corporate advisory space to advise our clients to help them to transition their businesses to a low carbon economy. Then in private capital, we provided equity to Abico. They provide hygienic storage of water. And especially during COVID, they have supported many municipalities across South Africa. I think they provided 12 tanks to the value of over 5 million rand. And this allowed, obviously, the communities to have access to clean water, to wash their hands, and to help spread the curve of COVID-19. Our export and agency finance team is also working with the new impact debt fund, Acre Capital, which is grant supported by the Rockefeller Foundation. They are designing an impact investing vehicle that leverages export credit agency capital to fund social infrastructure products in emerging markets. I think the fund is about $300 million, and they are focusing to co-finance projects that meet the SDGs. And within Ghana, we played a structuring role in a $22.5 million road reconstruction and storm drainage for Ghana. The construction obviously allowed a lot of local jobs to be created, and the draining system on the other side ensured that no lives are lost in the seasons where there's heavy rains. In addition to this, the infrastructure also allowed for access to education and healthcare facilities. Lastly, the Environmental World Auto Call. This is from our wealth and investment business that launched this recently. This gives you exposure to rands, and it's linked to the Euronext CDP Environmental World Index, and it pays good returns up to 25% per annum if the index is flat or positive in year 3, 4, or 5. And it has been very successful, and over $500 million almost have been traded to date. So yes, this summarizes what we have been up to so far, and we've really seen the space exploding and are really excited for the next few months. And we've also seen on a daily basis many interesting initiatives coming our way. Thank you.
Fantastic. Thank you so much, Melanie. It really looks like the Investec team has been busy. I'd like to hand over to our last panelist, Saphira from the DBSA.
Firstly, hi everybody, I'm Saphira Patel from the Development Bank of Southern Africa. Thank you for inviting me onto this platform to share some of what we do and what we've learned, both from the work we do and also from the course that I took with the Bertha Institute. Maybe an important thing to start with from our perspective is the DBSA and what it does. So the DBSA is a development finance institution. We operate across the African continent in both public and private sector. Mostly in South Africa, we do a lot of local government work, so within the municipalities, and that brings us a very different lens with which we do our impact investment. We've had quite a long process in what we've been doing from the operations evaluation side. We come in and ultimately our aim is to be able to evaluate our projects to determine the development impact, but also to provide that evidence for multiples of reasons. For example, it would be for reporting, for transparency, accountability, for process reasons, but it all ultimately ends up with the evaluation that we do, and that's where we produce verification of our impact. So the reason impact investment is so important to us, and the whole process, starting with the theory of change, project due diligence, right to the end, where we have project completion reports and then ultimately our evaluations, is that if we don't have our systems in place from the beginning, we will never be able to meaningfully evaluate our projects from an impact perspective. So as an overall introduction, that's where we sit as Development Bank of Southern Africa and as the team I work with, Operations Evaluation Team. So we at the bank, OEU, coordinates and manages the whole development results reporting process we have in the bank, which is a process that guides the development impact reporting and the monitoring systems in the organization. So when I attended the course, I think it was at the end of 2018, we'd had a fair amount of exposure in development finance and the monitoring and reporting that we did within that sector. And we'd already started the process and probably, I would say, developed some very bad habits in our reporting, which was impeding the manner in which we reported and provided evidence of our impact. So coming on the course for me was really good because it gave us that fresh start and brought us back to the core of what we should be doing. And the first really important takeaway was that we absolutely have to have a very clear theory of change or logic framework or understand why you're doing what you're doing. And for us at the DBSA, because of the types of projects we do, it was always very difficult to make sure you had your theory of change for each and every project in place prior to the project being approved. So coming on the course made us realize, actually, we need to put more effort into this to make sure we actually are able to do this on all our projects. Unfortunately, we haven't been able to do that on all our projects, and there's a whole list of reasons why. But we have been able to refine our overall bank-wide theory of change, which has provided us with a lot more focus, which I think was something we needed and which has helped a great deal. So even though we thought we understood the theory of change, the impact investment, the monitoring thing, the one thing going on the course was a very good refresher and pulled us back to the need for having a very clear and defined theory of change. Maybe not on each and every project for whatever reason, because we couldn't do that, but definitely for the organization at a strategic level. And then the next point for me, the other key takeaway, was that capacity and buy-in. So capacity would ultimately create buy-in for impact investment, monitoring and evaluation is fundamentally important. One of the big problems we've had is that we didn't have buy-in across the organization, and investment officers tended to focus on the approval and the disbursement. And we know as a DFI, it's not just about the approval and or the disbursement. It's actually about the impact we're making on the ground and providing evidence of that impact. So we'd gotten stuck in this typical traditional financial project cycle, and we had to basically capacitate the whole organization, get people to understand and to buy into the reason we are a DFI and we are doing what we do. So in the last 2 years, we've definitely put a lot more measures in place that are helping us on that process. We are by no means where we'd like to be, but we're getting there. The one key way that we think we've achieved a great deal of impact in that is by what we call our development results working group. So we put in place a working group, and I'll speak about that a bit later. The third thing, the last thing, is the complexities that surround impact measurement, indicators, data, verification, quality of data is something that we kind of always think, oh, if we do this, we'll get it sorted out. But it's very, very complex, and it's an ongoing process that just never seems to end. But with each step we take along that path, we get better data and better quality of data, and then better verification of our actual impact. So let me just take us on to the next one, because I'm running out of time. I could speak on this forever because I love it, but let's focus on what we've been doing, what we've learned. Overall, this just shows from 2014, where we started one of our key things, which is our development results reporting framework. And now it ends at 2019, where we started the revision of the DRRF, as we call it, which is now going to work with updating and putting in place better systems and revising and having more of an impact investment focus within our DRRF. A new tool we've got is our development index, which is helping us to categorize our projects, which we then evaluate against at the end of the day. But that's not what I wanted to talk about the most. What I want to talk about is this second last point, the development results working group. What we did is we put together a group, a steercom, that basically sits before investment committee. So any project, before it gets to investment committee, has to come through our development results working group. And that's helped us with standardization of indicators, matrices. It's helped us with making sure we have a good governance framework in place to facilitate that. And most importantly, it's helped us better integrate or mainstream the need for impact verification and identifying what the impact is that we want into all our projects. We only started it in 2019, but since then, the results from having that in place was significant. And one of the key reasons that we went in that direction, I think it's coming after the Bertha Institute course that we took, where we realized that we actually need people to understand this better and to understand the theory of change behind everything. So in a nutshell, that's where we are. We've still got a long way to go. We're having really exciting discussions on indicators and matrices, and I'd love to go into them with you guys again, but that maybe is for a later discussion. I have seen some questions on that as well. We'll be happy to share if you want to get hold of us. My details are on the next slide. But yeah, so we love what we're doing. The course was really amazing and very helpful.
Excellent.
Thanks.
Sorry, Steve.
Great to hear about impact measurement and management. We're excited to also have sessions on the fundamentals, designing your strategy, and managing for impact in the course. Can I ask all our panelists to please put their videos on, and I'll hand over to Oni to take over from here for the Q&A session.
Excellent. Thank you guys so much. It was really great to get to hear from all of you and get to hear what's continuing to happen. And what really stood out for me from your presentations is kind of three things. One, the increasing sophistication, impact measurement, particularly from what Saphira was telling us, the increasing number of products that are starting to be available within impact investing on the continent. And I think we can see that from what Hamdiya has shown us, their fund they're bringing on board, what Todd and Vukile talked about, as well as what Melanie talked about. And then thirdly is just that this community is growing and it's growing quickly. So I think it's wonderful to be able to be a part of as this community grows and as this capital really hits the ground. So there's been lots of very interesting questions. We'll try and take a couple. I think the first one that I thought I'd ask you all to reflect on, or a few of you, it's up to you, is trends around pension funds and limited partners. What conversations are you hearing from them, and how is that directing the work that you're doing within your institutions?
So I don't mind having a comment or two on that. I think from a South African perspective, it's been a slow trend. You get some of the larger mega funds that have allocated and supported key social and environmental aspects. But I think generally, if you have a view across the full pension fund spectrum, typically is if it goes into the private markets, then that's even more difficult, I think, for them. And then to Jared's point, I don't think was answered on the chat around whether investors are willing to accept concessionary returns. I think in the pension fund space, that's definitely not the case. So trustees have a fiduciary responsibility to their members. But that said, I think you're finding a couple of things happen at the moment, particularly in the response to COVID. I think a lot of pension funds are actively taking a different view in that there's a moment in time that they actually do need to respond, and this might be a catalyst for change. But also there are a lot of investments out there that where you don't need to compromise on return. You can just direct capital and achieve market rates, but that capital is achieving a certain purpose. But I think my main point would be, and I don't want to give too much away because I think that you'll learn a lot about this on the course, is really around some of the innovation, particularly in terms of blended finance. So I think I alluded to it in my presentation in that you find a lot of different stakeholders with different mandates in terms of how to execute, but they've got similar objectives. So you can actually find solutions and create structures that bring in different investors into different parts of the structure where either they take different levels of risk or they're willing to accept different levels of return. Maybe donor capital who just want to get certain projects off the ground can effectively subsidize financial returns. So it's a lot of innovation that tries to address that. And I think you will definitely find in our market, but we're definitely looking at it, to find ways to bring in pension fund investments in a way that both can make a positive impact but still allow trustees to deliver to their fiduciary responsibilities.
Excellent. Hamdiya, as an LP, what are your thoughts on this?
Yes, I think that the conversation with pension funds will keep going because, as Todd said, they have their own fiduciary and regulatory constraints. Blended finance would work, and I think it's important we begin to look at different structures for pension funds because they are limited in terms of what they can do. Yep. But we also need to look at the regulatory side because, for example, they need to mark to market, so they can't put money in too much of a long-term vehicle. So in Ghana, they were not even allowed to invest in certain asset classes, for example, in private equity, venture capital, and until 2017 when they were allowed to do that. And yet they are still unable to do it because there's always a discussion between the trustees and the managers. So I think there's still a long way to go in terms of discussions, but that brings to mind the way you have been looking at the alternative structures because it's very, very important. Pension funds need alternative structures, not what we are currently selling to them.
I couldn't agree more. So there's a few questions on the chat as well. We'll be looking at a whole variety of alternative structures as part of the course, something that I specialize in and have posted a little bit on. I couldn't agree more. We have to figure out, I think, asking LPs and funders to take concessions when they don't have the ability to take concessions is not a smart way to get money into the space. So we have to develop structures that meet the risk return expectations for the different stakeholders. Absolutely. Melanie, could you talk a little bit about how you guys are thinking about integrating impact into some of these new funds and products that you're launching? I know it's a really big question, but the question was around making sure that impact is actually embedded into a fund as opposed to kind of bolted on.
So if I can give you an example of the SDG bond that we are looking at, obviously we've identified as Investec as a group that we are going to focus on 6 priority SDGs: the quality education, clean water water and sanitation, etc., etc. So what we are doing is we're actually tying that to the social bond principles and the green bond principles, and we put KPIs against those to see what would be the best match, or what would be the best KPIs, and then we would measure those KPIs obviously during the course of the bond.
Excellent. Perfect. And that's really where we're seeing, again, the embedding of the impact and actually how the financial product is structured as opposed to just a nice to have. Saphira, there's a good question here around the power dynamics, people on the ground and how they are embedded into the actual collection of data and how you measure.
Okay, so that has been one of the more problematic sides for us. If we take an example of municipalities, it's very difficult for us to gather data within a municipal environment. It's also very difficult to expect the municipalities to give us that data on their projects. There's quite a big gap, resource gap, capacity gap within the municipalities to actually gather that and the sort of data that we want. Within private sector projects, it's a bit easier because then you're actually dealing with the people receiving the funding, or a lot closer to them than you are when you're dealing with the municipality. And that's where we've got, for example, a project in Kenya where we were able to sit down with the client and go through everything and put in place systems where we can use people who are receiving this services or where the impact actually happens to provide data back to us through a system. And then we are able to get really good, clean, meaningful data that can then help us with our impact investment. So on the one side, it's a lot easier. Within the municipal space where I think we make massive impact. I mean, the impact of working with municipalities to provide water, reticulation services, energy, that's really where a lot of the impact happens. However, measuring that and determining what's happening and verifying that is incredibly difficult for us. And we haven't found a solution to that yet. We're hoping that working on a project by project base, we might be able to come closer to our clients and to the people who receive services, but we haven't cracked that one yet.
Excellent. Yeah, it's a tough one. And I think I would suggest that everyone check out the work of 60 Decibels. It uses cell phone-based surveys to be able to collect data. And Karim Haraji, who will be leading us through the impact measurement, has signed on to the webinar as well. And he'll be talking through a variety of ways to be able to continue to work towards that. But as Saphira said, it's not something that anyone has necessarily cracked. There's some really good strategies that people are implementing to try, but it's something that's still evaluating or continue to evolve. Vukile, do you want to answer this question around prioritization of different impact sectors? So how have you, within the Resilience Fund, decided on which sectors to focus on, and how do you prioritize those in your investment process?
Sure, Oni. It really has been a function of, what we saw as a real need within our country, really. We had a really wide mandate, and we would have been able, and we are able to cover a number of SDGs or a number of impact kind of themes. But for us, it's always really been about, reducing inequalities, and that's really been through job creation and providing people with real opportunities for upward mobility, which is why that SME financing piece is within the Resilient Fund. Housing has also been a critical area for us as well, especially with the impact of not having access to affordable housing and what that means for your daily lived experience, where that housing is actually located, how far that is from an economic opportunity, and what the impact that has in your actual disposable income. So for us, it's been prioritizing those specific areas, also, with green energy and education as well, and those basic needs that we believe quite necessary within the context of our country, which is also why I think the SME debt fund that we are also launching is in direct response to prioritizing a certain area, which is to say, there are SMEs that are very vulnerable within this environment, and how is it that we then assist them to kind of weather the storm and see them through a recovery period? That's really been our process.
Vukile, that was a perfect transition to my last question, which was going to be, I'm so sorry, everyone, you've made it 57 minutes without talking about COVID. Just going to ask our panelists as a closing, what are you seeing for the role, either within your institution or outside, that impact investing can play within this COVID crisis? Melanie, can we have you start us off?
Yes, sure. So there's quite a bit of opportunities in this COVID crisis. I mean, COVID has exposed the vulnerabilities of South Africa and what we've been struggling with for so long, with the biggest one being inequality, and then poverty, hunger, not water, etc., etc. So I think there's a lot of space where impact investing can play and where it can help communities, especially for food, water, housing, etc.
Excellent. Saphira?
From our side, I mean, I think impact investment, the best thing about it is it's able to direct funding to where funding is needed most, or to where you determine or prioritize the funding is required. And from that perspective, to also see the outcome of that funding and then to be able to respond or change or redirect funding, I think that would be a critical, or is a critical role that impact investment can play within the COVID response. I mean, as DBSA, we were on the news yesterday to unveil, I suppose, our COVID-related response, which is linked to the impact investment initiatives that we have as well. So definitely very important.
Hamdiya?
Yes, I think the role of impact investing, actually, there's more opportunity for impact investing now. We need to look at it across, supply chain, self-sufficiency, healthcare innovation, which all require some kind of funding, especially within the African continent. And there is so much to do, and there's so much demand now that if you're an impact investor, you need to sit down and look at where your strength is and what you can do to play that role, because it is key. It's going to be very, very important. And that is the way we can turn around for efficient recovery. Otherwise, you're going to stay in the slumber for a long time.
Excellent. Vukile, you've already told us what you guys are doing. You're launching a fund. Well done. Todd, do you want to finish off on what else can Sanlam do other than all the stuff that Vukile has told us about?
So I think what Sanlam can do in addition is put the message out there, galvanize people, because I think what we're saying is that there's such a dire need and people's lives are impacted. You don't have a job, that has a massive impact on families, communities. The fact that there's a lot of capital out there that has the potential to save people's jobs and to create jobs. There's just a role for investors out there right now, more so than ever. Totally
agree. Excellent. Well, thank you all so much. Thanks so much to the Bertha team and the communications team as well, Grant and Precious. Thank you for doing all this and getting us set up on the webinar. Steve, thank you so much for being the master of ceremonies and getting us through everything and doing all of the prep work beforehand. To our panelists, incredible insights. And I just would like to just encourage everyone that has joined us to look at participating in the Impact Investing course this year. It will be much more like this. It's going to be discussion. All of those presentations you saw, you'll be watching in your own time. It is going to be discussion. It's going to be small groups. It's going to be Q&A. You're going to be able to really dive into what is the best practice around finding deals, doing deals, structuring them, being able to understand funds and fund economics, new innovative financing structures, and much, much more technology, impact measurement and management, and theory of change. I can continue going on about all of our many different sessions and getting to engage with a community of like-minded professionals. So we will be sending out more information on the course as well as the webinar, but just thank you all for joining us, and please have a wonderful rest of your day. So thank you very much, everyone.
Bye-bye.
Thank you.
Thank you.
Bye.